Hey everyone, welcome back to Corporate Decoder, the place where we dig into the nitty-gritty of corporate filings. Today we are looking at Onconetix Inc. and their recent struggles. It seems like this company is having a bit of a rough time, and their report basically says we haven't filed our report and we might get kicked off the stock exchange. Let's decode what's going on behind the scenes. This is an 8K filing, also known as a current report. Companies use these to announce important events to investors. This one was filed on April 30, 2025, but it talks about things that happened earlier that month. The main event is dated April 24, 2025. This is when Onconetix received a notice from Nasdaq. Nasdaq is basically the stock market police, making sure companies follow the rules to stay listed. The problem is that Onconetix didn't file their annual report or 10K on time for the year that ended December 31, 2024. Not filing on time breaks one of Nasdaq's rules. It's like missing a deadline for a really important assignment, and now they might get a failing grade in the stock market. But wait, there's more. As previously reported on April 18, 2025, Onconetix was already in trouble because their stock price was too low. To stay on Nasdaq, the stock needs to be above $1. Theirs wasn't. Specifically, the stock had been below $1 for too long, violating something called the minimum bid price rule. The company has until May 1, 2025 to ask for something called a stay, basically asking Nasdaq to hold off on kicking them out while they sort things out. They are hoping to get a hearing with Nasdaq on May 27, 2025. If the price of a company's stock stays too low, Nasdaq can start the process of delisting it. This means the company's stock would no longer be traded on the exchange if Onconetix's stock price stays too low for too long, or they can't convince Nasdaq otherwise. They could be kicked off the exchange. The company says they are working hard to finish that missing 10K report. Getting that report filed is a big step in showing Nasdaq they're serious about fixing things. To keep investors informed, Onconetix put out a press release about this whole situation. Companies are required to publicly disclose these kinds of notices, so everyone knows what is happening. Exhibit 99.1 is just a copy of that press release. It's there to back up what the company is saying in the 8K filing. Now, let's step back and look at the bigger picture. Onconetix is facing a double whammy. They haven't filed their annual report on time, which is a big no-no. Plus, their stock price is struggling. Both of these things could lead to them being kicked off the Nasdaq stock exchange. That's a serious problem. It makes it harder for investors to buy and sell their stock, and it can hurt the company's reputation. The company's ability to fix this situation depends on a few things. First, they need to get that 10K report filed ASAP. That shows they're taking the issue seriously. Second, they need to convince Nasdaq that they have a plan to get their stock price back up. That could involve anything from new product announcements to cost-cutting measures. Failing to file financial reports on time can indicate internal issues within the company. It might suggest problems with accounting, management, or even the overall financial health of the business. It raises questions about what's going on behind the scenes. So what's my take? Right now, Onconetix looks pretty shaky. They're facing serious challenges. The stock price is low, they're late on their financial reporting, and Nasdaq is breathing down their neck. It's really hard to make a call on Onconetix's future. They're facing some serious challenges and need to turn things around quickly. If they can't get their act together, things could get even worse. Thanks for watching. If you found this breakdown helpful, please give us a like, drop a comment, and subscribe for more corporate deep dives.